So I think it's about time for me to take some responsibility and to admit to my mistake. Alibaba is also probably one of my worst investment mistake. Actions do speak louder than words, and I think for many Baba investors out here, Charlie Munger recalling Baba as his worst investment mistake actually took the media narrative, or at least the finance media narrative, by a storm. I think back in Feb of 2023, just 2 months back, everybody was making headlines. Oh, Charlie Munger saying that Baba was the biggest mistake he has made and stuff like that. So, in his specific comment, he did say that I regard Alibaba as one of the biggest mistakes I've ever made. In thinking about Alibaba, I got charmed by their position in the Chinese internet, and I didn't stop to realize they're still a goddamn retailer. However, I would like to say that actions do speak louder than words. And for those of you who don't know, you can just do a quick search on Dataroma. Charlie actually just reported his Q1 of 2023 results, and it does state that hey, he still currently holds onto his Alibaba position, still 300,000 shares strong. And if you click into the activity in Q1 of 2023, he essentially didn't make any move. He didn't buy anything or he didn't sell anything. So this comes as a very big question mark. Didn't Munger just say that Baba was his worst investment mistake? Why didn't he sell out of his position? Because for many of these so-called quote-unquote value investors, or investors that are extremely astute, as long as they've determined that it's a mistake, they will eventually just cut loss and just move on. They wouldn't be harped onto the idea of opportunity cost, sunk cost, etc. That said, the purpose of this video is not really to discuss whether Munger really thinks it's a mistake or not, but it's for me to admit my own investment mistake. So in looking at Alibaba, I think there are three main factors. Of course, this is in hindsight because I've been an investor for more than 2 years now in Alibaba, the stock itself and the company itself. I'm just gonna kind of round all the discussions up into three main buckets and to share with you my own experience so that you can probably learn something. And I don't know what you're gonna do with it, but it's free anyway. You just have to help me gently click on the like button and maybe watch a few advertisements for me to recoup some of my losses. But anyhow, looking at Baba, I wouldn't necessarily call it a huge mistake because I still have a very long time horizon for me to realize whether this is a mistake or not. If I'm willing to hold it out, who knows whether Alibaba will recover and goes to the moon or something like that. But I think at least in the last 2 years, I think I did make a portfolio update for Q1 of 2023. I posted it on my YouTube community tab. You can see that out of all my positions, I think Alibaba was the only one that's deep in the red, while the rest is probably break even or slightly in the green. So here comes the question: what's my main mistake, or what was the main lesson that I've taken away from this entire experience or this entire journey investing into Chinese tech? I think the first one is really slightly similar to Munger, but I think I'll just add on to the lessons. Firstly, it's really underestimating the length and duration of this entire narrative building of the crackdown, and also underestimating the level of manipulation. And on the flip side, overestimating the strength of the business, which is what Munger has to say. So let's talk about the underestimation side of the equation first. Firstly, I think when we really talk about this entire crackdown, I didn't really buy Alibaba at its peak, when everything was going well, when Ant Group was coming in and whoa, it's gonna be the blockbuster IPO, the biggest IPO of our lifetime and stuff like that. I wasn't really even remotely interested because it was just breaking all-time highs after all-time highs. Technically, I'm just that very weird kind of investor that likes to go into the market looking at companies at their all-time lows, or companies that came down 20, 30, 40% from its peak because of some macro event or some headwind that is surrounding the company. So which is why, at least in the bear market for the last 1 or 2 years, I've been extremely excited because you see Amazon down 50%, Google down probably 30-40% and stuff like that. Those are the kind of market conditions that excite me. But the bad thing is I kind of ran out of capital because a lot of my capital is kind of tied up because of my positions in all these different Chinese tech companies. Baba is just one of them. I have Tencent, I have KWeb and stuff like that. So I know that some of you are business owners yourself. And being an accounting student, I appreciate how tedious and how tough accounting can be. And I want to tell you guys about Awesome. So they are the experts in organizing your business accounts so that you don't have to worry about filing company reports or even paying taxes on time. Awesome accountants take care of all your finance admin through the app and are always on hand to answer your questions and give advice based on your company accounts. So track your finances while managing your payments and invoices all in one place so that you can focus on the more important stuff like building your products and reaching new customers. So they will walk you through setting up with your new accountant in a few easy steps, and it's like having a finance manager but at an extremely lower cost. As a bonus, if you choose one of their sign up packages today, they will also help you incorporate your business for free. If you're interested in starting a business, you can click in the link in the description box down below to get 16% off your first year. Thank you Awesome for sponsoring this video. So back to the idea of underestimating the length and duration. So when I first entered, Baba was already down, I think 30%. It was around the 220 to 240 range. The peak was 310. So it was down around 20 to 30%. So I was thinking to myself, hey, the Chinese government just launched the entire tech crackdown episode. They rug pulled an IPO, and they are essentially going in to try to manage the entire situation and the entire industry. So how long could it be? When I first entered, I think it was around at least a quarter into the entire crackdown. So I was thinking, sure, if it's gonna drag out to a year, that's 3 more quarters, I'm okay. I have the patience to wait it out. And then it dragged after 1 year. Things doesn't seem to be slowing down. 18 months later, it doesn't seem to be slowing down. And even after just last year, because of the COVID, because of all the party congress and stuff, then we are currently starting to see signs of improvement in terms of the crackdown. So that was more than 2 years, the entire episode and the entire crackdown. So firstly, of course, I admit to the mistake that, hey, I honestly underestimated the resolve of the government, and I thought it's just gonna be a chop, go in, they try to settle, bring in new regulations, try to make everybody stand in line, and then let it go, continue growing. Because at that point in time, the Chinese economy wasn't doing very well. It wasn't in a very good place either. So at the back of my mind, I was constantly thinking, hey, by constantly cracking down, trying to restrain many of these companies, they don't allow, and all these companies in return has been cutting back on expenses. They don't want to hire as aggressively, and it slows down the entire economy and the entire economic machinery. So I thought they wouldn't do it, but evidently they had the resolve and they continued dragging on the situation. It might have been a good golden opportunity for the CCP to regain control and stuff. Those are all the narrative building, but that's besides the point. And on the second part about the underestimating on the manipulating part, I think throughout the entire 2 years, there's been a lot of speculations and rumors saying that, Ant can go IPO again, Alibaba has talked to the regulators visited the headquarters and stuff. And whenever there's such news coming out, the stock price essentially pumped by 5-10%. And you can see just looking at the chart itself, the price pattern, it's extremely volatile because of all these very weird rumors and speculations. And judging from this, you can see that there are a lot of traders trading around the news, and which is something that I kind of underestimated in a way, because I would rather for a company to continue staying beaten down rather than experiencing such huge volatility, because if it stays down, then I have more chance to buy it at the lows. But yeah, I've been buying it downwards, and I've been buying it at probably some people can say that it's not very cheap because we have experienced 60. So when you saw 60 and I told you that I buy at 100, 110, 120, you'll tell me that, hey, it's too expensive, and it's true. I mean, in areas of improvement, if I could have loaded up the boat at 60, my cost price would be a lot cheaper today. But yes, I did, the lowest that I caught was 62, but because I bought it at such an early stage, the average cost price, if you add up everything, it's much closer to 120. So even until today, I'm down closer to probably 30%, 20 to 30%. So that's that. And on the flip side, about the first part is underestimating what the market or what the government would do, what the environment will cost to the business. On the other side, which is overestimating the strength. So I think for those of you who really didn't understand Alibaba's business, or not living on this side of the globe, which is Asia Pacific, you honestly wouldn't appreciate what Alibaba has managed to create with many of its business arms. Alipay is one of the biggest invention that Alibaba as a business has created. The e-commerce business, Taobao, Tmall, Lazada, stuff like that. These are just fundamental bedrocks of many living citizens in this part of the globe. So when you really look at the sprawling empire, what they've managed to build in China, and how many businesses rely on many of these platforms, it begs the question, is does the valuation really make sense, or is it momentarily being a little bit crazy? I honestly don't know. But I think I'm always harping on this idea that, hey, look at the business. They continue to execute over the last 2 years, the amount of free cash flow they generate, the earnings they manage to derive. But it's not reflecting the share price. Nobody cares whether this business is good or not. Who cares whether it's trading under a 10 times PE? Like, I don't know, it was an 8 times. Free cash flow per share continues to improve, at least over the last few quarters. I do admit that over the earlier part, or the late part of 2021, earlier part of 2022, numbers started to look extremely bad because the economic conditions started to hit them quite evidently and explicitly. But I think now, even on this road to recovery, the stock price remain beaten down. So I'll just like to say that what Buffett say is true. In the short run, it's a voting machine. In the long run, it's a weighing machine. At least for now, to me, looking at 18 months, 24 months time frame, it still looks like a voting machine. But I don't know whether this ending value or the weight of this business will be reflected effectively in the market. I don't know, because of this entire idea of a geopolitical tension, I don't know, a China discount and stuff like that. But that's just my own main takeaway on underestimating the length and duration and overestimating the strength of the business to be resilient, especially when all these macroeconomic factors come into play. So on the second mistake, on my own personal journey, is really this idea of sizing. So I do admit to the fact that, hey, I'm rather confident of this Alibaba investment. And by confident, I don't mean that it's going to give me Tesla-like returns. I don't think Alibaba is the next Tesla, or Alibaba is the next Apple. I honestly don't think so. You tell me if Alibaba is going to 10x from here to $1,000, I don't know. But for me to bet that, why am I going to bet so big into a specific position sizing or a specific business? Because I'm fairly confident that I wouldn't lose money. And by saying that I wouldn't lose money, meaning that at my entry price of around 120, at least give it another 5 to 10 years, I don't think Alibaba will be trading below 120. Who knows? The market might humble me. But for me to allocate such a disproportionate amount of my portfolio, I think Alibaba currently on a value basis, it's around 60%, 50 to 60%. On a cost basis, I think it was more than 60, 65 or 70%. So for me to be so heavy, to bet so heavy on a particular position, means that I'm very confident that I wouldn't lose money. But then that said, because of my overconfidence, that is why, even though all my other positions in fact is in the green, some are largely green, some is slightly green, net, I'm probably just break even based on the cost that I've put in, meaning the amount of money that I put in and the value of the positions today, because of the huge concentration into one position. So I mean, in hindsight, of course, I've been overly confident. I've been extremely confident in this position, and thankfully I didn't use leverage. So just to put it out there, all the positions I have, it's based on the amount of money that I have. The only air quotes leverage that I have is via options, but all I do in options is just sell put. And by selling put, meaning that I sell long dated puts, by the way. I don't sell short dated puts. So long dated puts, I can calculate the cash flow that's coming in. So in the event where I really get exercise, I will have cash to kind of essentially buy it. So effectively, it's a cash secured put. So that's the kind of the only leverage that I have. And when I go into my brokerage platform, I'm constantly seeing that my account is leveraged to maybe 1.02 to 1.05, depending on the value of the put option. But I'll just like to say that thankfully I didn't use leverage, and I have consistently warned all my viewers to not use leverage, no matter how cocksure or no matter how confident you are of the business or the investment. You don't know what you don't know. So you can't account for unforeseen circumstances. And who knows whether the Chinese tech sector will be the next ad tech, and then you see valuations collapse by 99% because it's essentially a vote of no confidence. So in terms of sizing wise, don't be too confident of yourself. But that said, I think I just wanted to put a caveat out there. Moving forward, I think I would still concentrate my portfolio. Concentrate to a point where maybe it's fairly evident, maybe like 25-30%. That will be my max. I wouldn't allow for a position to kind of just balloon to 50-60%. If the position grows into that size, meaning if the position has had a very good run, it just keeps appreciating, that's probably better. But in my case, it was really just a pure capital allocation mismatch, or pure capital allocation issue, where I put in on a cost basis. I knowingly put in so much money, even though that the share price keep going down, and I just keep plowing in money. I think that's the issue there. So there's a nuance there. So just take into account that. And I think that my third mistake was really this idea of a recency bias. So recency bias meaning I did joke last time that my middle name is called Falling Knife. So my friend do call me like Tay Falling Knife Chiking. So why do I have this very interesting middle name? It's because I really love investments, or I really love stocks that experience this kind of falling knife phenomenon. So my second big pick of the year, that time I think in 2022, was really Meta, Facebook. So we know, because of a huge amount of headwinds and revenue declining and stuff like that, the entire narrative flipped on Meta, especially when it started going to the metaverse and with this entire cash burn thing. So stock price I think collapsed by more than I think 70%. It's the same fate as Meta. So I started buying. I started entry at around 200. Around $200, so 210, 220, and then I started averaging down. I bought in again at 190. I bought in again at 160. So my average was around 180 something. And then do you remember one time when Meta actually collapsed below $100? I think it was around 80 plus or $90. So I was thinking to myself, hey, this episode seems eerily similar. It looks exactly like Alibaba. And I knew, I did my own calculation, I did my own valuation. I understand the entire economics do take into account that the entire collapse for Alibaba versus Meta. Alibaba was a lot more long drawn. Meta was a lot more short lived. It's a lot faster. So I didn't really have time to kind of build my conviction. But that said, I think going through that Meta episode, I was thinking to myself, oh, when the market is irrational, they're gonna throw every stock out the window. There's this quote, right? They're throwing the baby out together with the bathwater. And in this case, in that specific instance, I actually do have cash on hand. And I kind of do have one tranche of money waiting on the sidelines. But I didn't dare pull the trigger on Meta because I was just looking at it just free falling, and I was just thinking to myself, when the market is irrational, I would like to buy at irrational prices. In hindsight, of course, when you look at Meta at like $88 or $90, and then Meta today is at like what, 220, that's like an easy 2x or 120%. People will say that it's irrational. But when it was trading at $100, people were saying that Meta is a dead business and stuff like that. So yes, I do agree that I allowed recency bias to overcome myself, my rational thinking. I know that Meta is a good business. I want to own more Meta. And at that point in time, Meta was really trading at an attractive valuation, but I didn't dare pull the trigger because of my I would say terror or my nightmare that Alibaba has inflicted upon me. So from that case, narrative is narrative. Everybody has a story to sell. When the company is performing well, the story is it's going to be the next ABC, include company inside here. And when the company just continues plummeting, they'll say that, oh, this business is dead and stuff like that. So I think one issue is really to divorce yourself from your recent stock performance, especially for people that keep buying the dip and then stock starts recovering, and then you're under the mindset or mentality that every single stock that you buy, it will definitely rebound because of recency bias. And similarly, for those of you who were inflicted by the pain and the torture with many of your investment holdings recently because it has been going down and not recovering, try to divorce the feelings that you have gotten from those previous stock investments to the new ones. Judge the business based on the fundamentals and the new investment perspective, your thesis and your valuation around that company. Don't let it be kind of involved and be murky. Let everything go into place. But I do know, because humans are emotional creatures, these biases definitely will affect our judgment. So I think just a reminder for fellow investors out there to just stay cognizant and to stay independent of your many picks. And yeah, hope you guys enjoyed my own very mini reflection with my Alibaba mistake, and I'll see you in the next video. But more importantly, I will see you on the moon. Goodbye.